This is Terrence Andre Banks from Information Age Financial Solutions coming to you with about the economy and a great article I found from economiccollapseblog.com. I'm going to put the link inside the description as always. What can General Motors and General Electric were both victimized by the same Ponzi scheme, and they are both telling us the U.S. economy is in huge trouble. Always go by titles when I'm reading the articles, and especially with the things that we're moving to and why we need to be prepared. This article does pretty poignant in giving us some good information here. So we dive right in. America's twin economic generals are both in very deep trouble. General Electric was founded in 1892 and it was once the most powerful corporation on the entire planet. But now it's drowning in so much debt that it may be forced into bankruptcy. General Motors was founded in 1908 and at one time it was the largest automaker that the world has ever seen. But now it's closing a bunch of factories and laying off approximately 14,000 workers, as it anticipates disappointing sales in a slowing economy. If the U.S. economy really was booming, both of these companies would probably be thriving. But as you will see below, both of them have been victimized by the same exact Ponzi scheme, and both firms are sending us very clear signals that the U.S. economy is heading for troubled waters. Whenever you heard the word restructuring, that is always a sign that things are not going well for a company. And it turns out that GM's restructuring is actually going to cost the firm $3.8 billion. General Motors said Monday is planning to effectively halt production at a number of plants in the U.S. and Canada next year and cut more than 14,000 jobs in a massive restructuring that will cost up to $3.8 billion. Of course, the GM doesn't have $3.8 billion just lying around. This is where it gets really interesting. And so they're actually going to have to borrow the money in order to close those plants and lay off those workers. Could you imagine you have to cost $3.8 billion, but you don't have the cash to actually do that. Needless to say, President Trump is not very happy. You probably heard General Motors right now. Trump said he spoke with Monday with GM CEO Mary Barra, and I'm told you they were planning around with the wrong person. He retold reporters that he left the White House for a pair of political rallies in Mississippi that the United States has done a lot for General Motors. They better get back to Ohio and soon. There's no way that Mary Barra should have ever been made CEO of General Motors, and now the entire world is getting to see why. In addition to the elimination of about 6,000 factory jobs, GM will also be cutting about 8,000 white-collar jobs. In addition to the production costs, GM said it will reduce its North American white-collar workforce by 8,000. The deadline passed last week on the voluntary buyout for these workers, and GM spokesman Pat Morrissey told the Free Press that only 2,250 employees have asked to take the offer, meaning as many as 5,750 workers will be cut off, and the company keeps to announce told. Analysts told the Free Press to expect involuntary cuts in January. So why is General Motors doing this? After all, isn't the U.S. economy booming? That should mean increased sales from all the major automakers in the coming years, right? Unfortunately, the truth is that hard times are already here for automakers. In fact, Bob Lutz told CNBC that we got a demand problem on cars. Former GM Vice Chairman Bob Lutz said the automaker historically would have raised sales incentives to try to sell more cars before restoring the plant closures. Nowadays, GM looks at the hard reality, says we've got a demand problem on cars. What we are going to do about it, we have to shut some facilities and move production to truck plants, Lutz said on CNBC's halftime report. So I think that what we are seeing is a fast-acting and reality-oriented GM management. In other words, sales are not good, and so now it's time to shut down factories. Of course, GM is not the only one that's shutting down facilities and laying off workers. If you have doubt this, please see my previous article entitled U.S. Job Losses Accelerate. Here are 10 big companies that are cutting jobs or laying off workers. Worth to take a look at. Again, I'm putting the link inside the description. And definitely I would suggest clicking on this link, but I'm not going to go into that right now. Let's continue on. Well, General Motors has been much wiser with their money. They wouldn't have had to initiate a restructuring so quickly. Over the past 4 years, General Motors spent a staggering $13.9 billion on stock buybacks. GM executives are able to prop the stock price for a while, but at this point, the stock is down about 10% from where it was 4 years ago. The following comes from Wolf Richter. During this 4-year period in which GM blew, wasted, and annihilated nearly $14 billion on share buybacks, the price of its shares, including today's 5.5% surge, getting rid of workers is always good news for shares, fell 10%. These stock buybacks are a massive Ponzi scheme, and everyone that was involved is blowing such a giant mountain of cash at GM should be fired. And now thousands of hardworking Americans are going to lose their jobs. But it didn't have to happen. General Electric has also General Electric has also been victimized with the same exact Ponzi scheme. At this point, they are in the struggle for survival, which they are probably going to lose. On Monday, the stock slid another couple percent, and so far this year is down a total of 58%. Not a day passes lately without GE's stock getting hit by some unexpected development, and today was no exception. Now, the article is dated back to what does it say? Because he keeps using days that's Monday or Tuesday or stuff like. When was it? I'm not sure if that might show a little bit more down the line when this article was written, but let's get back to what I was saying. General Electric has also been about the same exact Ponzi scheme. At the same point, they are in struggle for survival, which they are probably going to lose. Next day passes lately without GE stock getting hit by some unexpected development. Today was no exception. GE shares, which are down 58% year to date, dropped over 2% on Monday after sliding much as 4.1% early in the session, approaching its final crisis low of $6.66 following research report by Gordon Haskett, analyst John Inch, which prompted fresh questions about the treatment of goodwill at GE Capital. In the end, GE is probably headed for total collapse. But if GE had not blown $40 billion of stock buybacks in recent years, they'd be in far, far better shape. The following comes from the Market Watch article that I quoted the other day. GE was one of Wall Street's major share buyback operators between 2015 and 2017. It repurchased $40 billion of shares at prices between $20 and $32. The share price is now $8.60, so the company has liquidated between $23 billion and $29 billion of its shareholders' money on this utterly futile activity alone. Since the highest net income reported by the company during those years was $8.8 billion in 2016, with 2015 and 2017 recording loss, it has managed to lose more on its share purchases during those years than it made in operations by a substantial margin. Even more important, GE has now left itself with minus $48 billion in tangible net worth at September 30th, with actual genuine tangible debt of close to $100 billion. As the new CEO, Larry Culp, told CNBC last Monday, we have no higher priority now than bringing those leverage levels down. Combined, General Electric and General Motors have blown more than $53 billion in stock buybacks, and now both companies are in huge trouble. The executives that gutted the finances on both firms by engaging these sorts of Ponzi tactics should all be fired and should never be hired by anyone else in the corporate world. For years, big corporations have been borrowing massive amounts of money to fund reckless stock buybacks, and has helped to fuel an amazing bull market run. But now the game is imploding, and unraveling this massive Ponzi scheme is not going to be pretty. Now, I just want to add one more commentary about this. Again, I kind of really went through this article pretty quickly. What the author does here is point out a good picture about this, but we don't realize that most people are complicit with this particular activity because so much stuff is based on the stock market and keeping pensions alive. That's why a lot of some of these tactics has been done. Well, of course, is greed, and we function constantly with financialization instead of actually doing real capital work and creating jobs. But that's the height when you get into this point where you're getting ready for a mass, getting ready to implode itself as a country, or your empire is about to become, into a much lesser state. So I just don't want to just put it on them that these guys would function in Ponzi schemes. It was the thing to do. And a lot of companies function on this. I'm not saying it's right I'm not saying it's right. I think it's wrong. But this whole notion that, that these individuals are just the evil part is when you have so many people complicit of that. They didn't care about it as long as the share price was going up. So people who work for the companies, they took advantage of that as well, and that's the whole thing about it. We don't live in the times that was done before. And we live in a finite planet. The way this economy is based on quarter to quarter, and long-term thinking is not part of the plan. So I just want to say that little side piece when I'm having these discussions and reading some of these articles, that just something else to think about. We live in different times. Get prepared. Think differently. Act differently. Look at ways to generate more income, and just keep yourself abreast of everything that's going on in the information age. Until my next video, I'm out.